Mic check, mic check. Welcome in, everybody. Jay, welcome in off the rip. Nabil, Juan, Ruby, hello, hello. Let's see what /ES is doing here. Okay, not much. No super big gap up or gap down yet. So we'll have to see what happens. I'm just going to give it a few more moments before we get into the trading plan for tomorrow to allow people to join into the live stream. Just a full disclaimer. It is a short week. Friday markets will be closed. I myself am taking Thursday off as a travel day, so I will not be here or posting a watch list on Thursday. So if you're a member of the Discord server, just make sure that you are aware of that and plan ahead. Make sure you build your own watch list or work together to even build a watch list. There's plenty of people in the Discord server that have taken the Higher Spartan program who know exactly what it is that I look for when I'm building these watch lists. So on days where I take off, I'm looking for those people to step up into leadership positions and really put to test what they have been taught and what they've learned from me. So it's a good opportunity for those of you to who have taken that class to shine and really put to use what it is that you've learned. Tyler, welcome in. Sully, Jay, hello, hello. Anything that I review in tonight's live stream, this is not financial advice. It's just my opinion. I'm not a financial advisor, so don't buy anything based off of what I say in this live stream. Again, everything here is just strictly my opinion. We're going to get started. The first one on the watch list for tomorrow will be not AMD, AMC. AMC. For a long time, I had a real position against adding AMC to the watch list because I didn't believe in, the meme stock craze and that it could be something that would hang around and stick around for some time. But I was proven to be wrong on that. AMC can make very large moves in a very short amount of time, and we saw that last week on Friday when the stock ran 19 to 20%. I think it was up like 23% or something at the peak of the day before coming back down. You see the big blue bar in the background? That is your volume bar. So a lot of volume poured into AMC. And started to push this stock back up. By the way, I'm on the daily chart time frame. I usually will start my analysis on the daily just to kind of get an idea of what the stock is doing as a whole. So here we go. Here's the deal, right? AMC has been on a downtrend ever since breaking down from this larger pennant pattern. So this was the breakdown from the larger pennant pattern, and it's been on this downtrend ever since. Spider-Man was released, and it was a big hit for AMC. I think it was a record attendance for AMC. So that's a big positive catalyst. Good news. And the stock already has a tendency to make larger moves from a percentage standpoint, and it was bought up. So what I'm looking for here on AMC is very simple. It's just a continuation idea. You see the blue line right here, that dark blue line, that's going to be the 200 EMA. That level is a dynamic level of resistance at this point. You see it was treated once as a resistance here before going down lower, and then Friday, of course, we pushed right up to that level before coming back down and ending the day. I'm going to move to the 5-minute time frame. This right here is very healthy. I'm not saying that this run up here was healthy because who could have guessed that it was going to continue to run after making this large of a move? But what is healthy is that it did not continue to go parabolic for the rest of the day, for the entire day, and it did not continue to go parabolic in the after hours session. I wouldn't be surprised to see this gap up a little bit, but what I like is that the stock pushed up and then started to move sideways. So it's basically building a base right here in this area around $28 and $29 as a level of support. So what I'm looking for tomorrow, if we open up under 30, is just the break of 30 for the run to 31 plus. Percentage-wise, you guys know that all I do is aim for those base hit trades, right? I'm aiming for around 2% profit margin on the stock. I'm aiming for around 20% on my options contracts. This a $1 move on AMC, just from 30 to 31, offers over a 2% profit margin there. That's 3.25%. That's possible. So the profit margin on AMC is huge if we get a continuation play. All right, so the scenario is that, well, there's a couple of different scenarios here. The first one is that the stock opens flat underneath $30, and all that we're looking for is a break of 30 for the continuation run to the top side. The next scenario is that it opens up over 30, but underneath the previous day's high of day, underneath 30.7. If that's the case, or if that's the scenario, I'm either looking for a break of 30.5 or a break of 30.7. If it gaps up beyond both of those points, over 30 and over the previous day's high of day, then let's say it opens up right here. The next thing that I'll be looking for is just a break of the pre-market high, whatever that level is going to be. So whether it's 30, 31.5, 32, 33, etc. I'm just looking for a continuation trade on AMC. I think that this is could be the start of something larger with these smaller cap or mid cap names that have really been kind of beaten up and oversold on the daily chart time frame. So I'm going to talk about a few stocks that kind of fall into that category. Either, you can call them growth stocks if you want. You can call them meme stocks or speculative stocks. They all kind of move similarly, but a lot of these names have been oversold and beaten up. So another one that I want to talk about is PTON. Right, this is one that was huge during or had a huge run. During the COVID time frame, all the way up to highs of 171, and has since fallen all the way down to lows of around 36. So the stock might feel oversold at these levels, and certainly has a lot of topside room to be made up here. So PTON will be one that doesn't necessarily make my main chart watch list for tomorrow, but I definitely want to keep an eye on it because it has a lot of potential here, a lot of topside potential, especially if there's some volume that can get in behind this name, and if we see these stay-at-home stocks start to pick back up with the COVID variant now out. We could see these names like DOCU, ZM, PTON, all of these stocks kind of pick back up where they were during the main part of COVID, during the peak of COVID. Do I think we're going to get a major run like we did previously? Probably not, but do I think that there's plenty of room here for this to reverse? Yes. So I want to keep an eye on PTON. Let me move this to the 5-minute time frame. I want to keep an eye on PTON immediately, just over $43, to see if it can continue to move up. You see that downward trend line that I have drawn there. I'll go back to the daily. You see that downward trend line that I have drawn here on the daily chart time frame. A break of that downward trend line means that we may have a break of the downtrend, which means we could be on our way back up for an uptrend. So immediately I'm just looking for a break of 43. But if I'm trying to confirm this as a downtrend trend line break, for confirmation, what I want to see is a break of 46 or 47. So not only would we be getting a break of this downtrend trend line, but we would also be putting in higher highs. So at this point, we've got a lower high, lower high, lower high. So a break of this trend line here, around $46.5, $47, would mean that we're putting in higher highs. So again, I'm just immediately looking for a break of 43. I'm going to have the PTON as a side chart watch list item for this week. And then if we do get a break of 43, I'll keep a close eye on it to see if we get a true reversal maybe on Tuesday or Wednesday. HOOD is another name, Hood, Robinhood, that kind of falls into this speculative stock / growth stock category. The stock has had highs of $85 and is now trading around the lows of $17. What I like, though, is that the stock is not only, well, it is still making new recent lows, but it's really trying to test this $20 price point. So as this hopefully flattens out here, if we get a break of $20, I think that there's a lot of topside room on Hood to be made up. I've been keeping an eye on this one. This is a stock that I'd actually like to own at some point, but it's a case of like, you don't want to enter into this and catch a falling knife. That's a term that's used when you're trying to buy something that's just continuously making new lows. So I do want to make sure that I'm staying patient on Robinhood, keeping an eye, same deal, right? Keeping an eye on this downward trend line and looking for higher highs to be put in. So you see I have 2 alerts set on Hood. I think one is right at around 19.5. The other one is right here around $20. I'm really interested in Robinhood if it can get over 20. If it gets anywhere near $20, it will be on the watch list. If we, if we get a gap up on Hood and it opens up near 20 or over 20, it will absolutely be on the watch list. Because I think that this has a lot of topside room to be made up. But there's no trade really on Robinhood until it gets over that price point. You could potentially say, yeah, okay, well, why do you have an alert set at 19.5 if there's no trade until 20? This is just a pre-alert, right? That's just an alert to let me know that the stock is moving up and that I need to pay closer attention to it. So you'll see me do that quite often. I'll usually set 2 alerts, one pre-alert and then one actual alert. RBLX. This one is definitely going to be on the watch list for tomorrow. Originally, so last week I was actually bearish on this. You see this gray shaded box here? This is a gap area, and it's a pretty big gap from around let's just say roughly $80 to $92, $93 is the gap, and that's fairly large. When RBLX pulled back off of these highs, it validated this gap area not once, not twice, but 3 times now as a support. So I was originally bearish on this because I was thinking, okay, RBLX has lost the 50 EMA on the daily. It's gapped down. It has a gap below. It could gap down into, or it could fall into this gap to fill it, right? But now that it's holding it as a support, my bias has changed on RBLX, and I'm actually thinking, well, maybe it bounces here and makes new highs or new recent highs. And there is still a gap overhead. So it's an odd scenario where we have a gap below and a gap overhead, right? And the gap overhead's not super significant. I'll move to the 5-minute time frame. The gap overhead is not super significant, but if we're talking about percentages, I mean, 1.7% is the gap area right there. And you guys know I aim for that 2% profit margin. I mean, that's pretty close to 2%. So I wouldn't mind trading RBLX over 103 or over 103.5 for the move up to 105 plus, especially now that it's holding the gap area at around 93 as a support. So I'm going to include RBLX without a doubt on our watch list tomorrow. I would like to see it hold up over $99. The number that I'm really paying attention to is 100, but seeing that this bounced there at 99, I want to give us a $1 cushion. So I'd like to see it hold up over 99, and of course I want to see new recent highs put in. So as of right now, I'm looking for a break of either 103 or 103.5 for the gap fill up to 105 on RBLX. So this one, without a doubt, along with AMC, will be making our main chart watch list. And if you're just joining in, Robinhood, HOOD, and PTON will be making our side chart watch list. So we've only talked about 4 stocks here: AMC, RBLX, Hood, and PTON. 2 main charts, 2 side charts. Let me get back to the daily chart time frame here. By the way, I haven't mentioned this yet, but I will be taking charting requests from you all as soon as I get through these next few stocks. CSCO. If you're a member of my Discord server, you should already be familiar with this setup. This is something that I mentioned last week, and we've kind of had eyes on it up here. We haven't gotten the move that we wanted just yet, but I'm thinking that we might get that move here soon. So CSCO, this is, by the way, despite what it looks like, this is not the all-time highs for this stock. It does look like it there, but it's not, trust me. So the stock has bounced off the 200 EMA, reclaimed the 50, ran up to new recent highs on the daily chart time frame, and is now, instead of rejecting at these highs, kind of consolidating just below them, right? So we're getting like a base being built here just underneath the recent highs. So all that I'm looking for on CSCO is a break of probably 61. I think we'll just say a break of 61 to play it safe. It's actually that big volume that you saw come in. I think that was right at the end of the day here. Yeah, so it actually pushed up a little bit after hours. So we'll see if we can get a break of this consolidation here, the break of these 2 days where it was just moving sideways and chopping around. And a break of 61 will give us a new recent high, hopefully for a directional day and a directional move like this one here. All right, so let me back this up to the weekly chart time frame so you all can see what the true highs is. So it's 82. Right, and our next big resistance above where we're currently trading at is going to be right at around $70 based off of all of that resistance there. And then where we're currently at is 60, right? So all of that kind of lines up. Well, we're just over 60. We're looking for that break of 61 here for the move, hopefully up to around 65, 70. I don't know if we're going to get that all in one day. It would be nice. I don't know if we get that all in one day though, but maybe over the course of the next week or two. All right, so CSCO, keeping watch on this one over $61 for new recent highs. DOCU. This is going to be the last one that I talk about here for stocks that are making my watch list. DOCU, this is a huge gap. The stock fell from 314 all the way down to 130 and has since done pretty much nothing. It kind of reminds me of PayPal, right? So PayPal fell from like 310 all the way down to 180 and has just pretty much been doing nothing. So a lot of chopping around at these lower levels. This is not necessarily a bad sign. One of the first signs to a trend change is consolidation. So I'm thinking that this potentially could be the lows for DOCU, at least temporarily the lows. There's a huge gap here. Big gap, plenty of room for this to push up and fill the gap. We already got a partial fill right here, and then the stock came right back down. By the way, this was caused by earnings, right? So what I'm looking for on DOCU, and this is just something that I'm looking for this week, not necessarily for tomorrow, is a break of 163. I think a break of 163 gives us a move towards 180 to partially fill the gap, and that's going to be resistance point 1. Basing that off of this previous price action over here. Right? So old support can become new resistance, so a push up into the gap from 163. I'm looking for at least a run to 180, and then we'll go from there and see, does this stock continue to push up to fill the gap, or do we reject and come down? What happens at that time? But for now, make sure you have your alerts set at 163 or 164. I also have another one set over the recent highs here at around 157, 158, just to let me know that it's starting to move up. But this is also, DOCU is also one of those stay-at-home names, right? So if we see the Delta, or not the Delta variant, the COVID variant become more of an issue or more of a factor that's influencing market decisions, again, we could see stocks like PTON or ZM or DOCU turn around and run. I think this week's focus is really going to be on those bottom bounce plays, right? We've got names like ROKU bouncing off the lows. We've got names like PLTR that's bouncing off the lows. Of course, the ones that we talked about being Hood, being PTON, right? A lot of these stocks are kind of bouncing, and I don't think that you necessarily need to trade all of them. I think that if they're moving similarly, and we do see a bounce on a lot of these names, then you should be fine just focusing on one and trading the one that maybe one or two that you identify with the most, one or two that you really understand the price action of. All right, so that's it. If you're just joining in and you missed the analysis, you can rewatch this stream. It is recorded, so once I end the stream, you can just start it over from the beginning. I'm going to now move into taking charting requests from you all. So just type up in chat if you want me to review something, and I'll go ahead and take a look at it. In order to type in chat, you must be a subscriber to the YouTube channel. It doesn't cost you anything, so just hit the subscribe button. You can wait 1 minute, that's all you have to wait, and then you will have free access to typing in the chat. By the way, if you haven't done so already, press that like button for me too. If this stuff is helping you out, or you're getting some value from these videos, I would appreciate it if you just press the like button for me. Quick overview: AMC, RBLX, CSCO, HOOD, PTON, and DOCU are the main stocks that I will be watching tomorrow and for the rest of this week. Unless something changes, those will be the main ones that I'm watching. All right, somebody mentioned ZM. Yeah, so this falls into that same category as PTON, as DOCU. ZM is right there with it. ZM may even be the stay-at-home sector leader, if you will, because this is one of those stocks that made a massive move. I mean, this was crazy to me. I remember watching this. I mean, you see my boxes down here, right? Like, we were trading this when it was trading around $100. And then watching that run all the way up, I knew that this wasn't sustainable at these levels, but I also thought that it wasn't sustainable at these levels either, right? Like, this was a wild run on the way up. So ZM, can it reverse here? You know, what's going on? Yeah, we've got a lot of things going on with Zoom. So a double bottom pattern formed at $180. Boom, boom. Double bottom, by the way, is a bullish reversal pattern. So that's what it looks like. And then your anticipated move is this leg right there. So bottom one here, bottom two there, and then this level here, this is referred to as your neckline, right? And so for a double bottom pattern to be validated, you have to have a break of that neckline there, which is right where ZM is trading at currently. Conveniently, too, this level is located at the $200 hold number. So we also know that hold numbers like to act as natural points of support and resistance as well. So for ZM, yes, I think that the double bottom play might be something that we pay attention to here. It's over we'd want to see it over the whole number at 200. We'd want to see new recent highs put in, so maybe a break of like 202 for a possible continuation play to the top side. It's down massive, big time from the highs, and certainly has plenty of room to move back up to the top side. The one thing that I don't really like about ZM, just as an options day trader, is the spread on the option chain. ZM doesn't offer the best contracts for day trading. That may change tomorrow. Maybe the market opens, maybe a lot of volume flows in and those spreads tighten up. That may be something that changes. But typically ZM does not have the best spread on the option chain. But yeah, I like it. So thank you for bringing that one up. And by the way, this is not an obscure point to be bouncing at, right? 180 is not a random point. This trend line was drawn off of this resistance over here. So when ZM was on the way up, it was meeting resistance for 1, 2, 3, 4 weeks in a row before breaking out and getting a big move over the 180 price point. And that's really kind of the start of this massive run here. So for ZM to pull all the way back to 180 and start to bounce, that's not random. Definitely by design. And this is a good example of the market not forgetting support and resistance points. I'm seeing somebody mention Tesla, so let's review that one. Tesla. So Tesla this is tough because I thought for sure that Tesla would be making some kind of larger move based on this pattern here. And it didn't, right? It broke down, it lost the 50 EMA, broke down from this pattern, and wound up pushing down to fill this gap right there. And so now that Tesla has filled the gap, and that's going to be support right at around 900, right? So now that Tesla has filled the gap, we've got to ask ourselves, does Tesla bounce from here and make new highs and possibly break this downward trend line and push back up? Or does it fall and continue to push back down towards 800, towards that 200 EMA? If I go to the weekly chart time frame, so you could see this a little easier, and just extend this trend line all the way back, much like ZM, this is a case of potentially where old resistance at 900 can become new support for Tesla. So I don't see anything here immediately that's saying that Tesla is a high probability trade. Whereas like ZM, we had the volume come in, we've got the push up, we've got the neckline being tested on that double bottom. We don't have any of that for Tesla yet. All that we have is a day where it pushed down to fill this gap and then closed green. So I need to see Tesla get back up near 1,000 for it to really, really have my interest as a long idea. So I'm going to set an alert there. You do see I have recent alert, a pre-alert, early alert set at 960 just to let me know that hey, Tesla could be moving back up to the top side. But where it's currently at right now, I don't see anything here screaming, hey, this is a high probability trade. I think for Tesla to be valid as a long idea over 1,000, it absolutely should hold up over 900. Otherwise, there's a good chance that this pulls back to test the 200 EMA as a support near the $800 price point. So Tesla for me, if there's no trade here unless it starts to move sideways or move back up towards 1,000. PayPal. Somebody mentioned PayPal. I don't see any trade on PayPal here unless it's like a longer term swing trade. There's certainly not a day trade that's available here. There is a range that's being formed, so and it's pretty clear. Support is definitely at 180 as of right now, and your resistance is definitely at 200. The stock is just bouncing between 180, 200, 180, 195, 180, maybe back up to 200. So you could trade it within this range, but I'm just personally going to wait on PayPal to break over 200 before I put this on my day trade watch list. All right, so no trade, or maybe if it breaks underneath 180. I'm not much of a short biased trader, so I'm probably not going to short this if it breaks under 180. But what I would do is maybe look to add shares on PayPal for a long-term swing play, longer-term swing play. Because I do feel that at some point PayPal does reverse and push back up. But from a day trading standpoint, I don't see anything here until it breaks 200. It has to break this range first, range of consolidation. Somebody mentioned Shopify. This chart is very messy. Just right off the bat, I don't see, like, I can't tell you anything about what this stock is going to do. There was a long period of time where it was rejecting right here at 1560, which is the most random number to me, but that's what it was doing. It broke over one time and then pulled back and then met resistance, 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 and then boom, big breakup into new all-time highs, but could not sustain that level. Pulled back, bounced one time, fell through, and then has even most recently lost the 200 EMA. I don't see anything here on Shop that's even really worth my time from a technical analysis standpoint. It's very hard to tell what it's going to do. I will say this though, on the daily chart time frame, a stock trading over the 200 EMA is considered to be in an uptrend, while a stock trading below that 200 EMA can be considered to be in a downtrend. So you see this level was acting as a support point 1, 2, and 3 times, and even more than that in the past, 4, 5 times on the way up, right, as it's in an uptrend. But now, most recently, Shop has lost that support, and it's no longer putting in higher lows. It just put in one of its first lower lows here. So could this be the start of a downtrend for Shopify? Maybe. It could be. Only time will tell. It's got to get back up and over that 200 EMA to be considered to be in an uptrend, though. Amazon. Somebody mentioned Amazon. AMZN. All right. So much like Shopify, it's tough to tell where this is going to go from here. It is trading right at that 200 EMA. Big support point. I'm just going to put arrows every time it's bounced in this area. Big support point for Amazon at that 200 EMA. It's not doing much though, right? If we have a downtrend trend line drawn across here, we've got support trying to be held up at that 200 EMA on the daily chart time frame. It's kind of being compressed almost between that 200 EMA and that green dotted line, which is that 50 EMA. In my opinion, something here has got to give. You might see a news catalyst come out on Amazon for Christmas sales, and even for like a lot of retail names like Walmart and Best Buy. You may see a report come out for maybe, Amazon had record sales, and that might be the catalyst to push this up over that 50 EMA and off this 200 EMA. So what I would do at this point is just patiently wait for a break of 3,500, that being a whole number and that being the most recent highs. I would just wait for a break of 3,500 to tell me a few things. Number one, that it's breaking this downward trend line. Number two, that it's holding that 200 EMA as a level of support. Number three, that it's breaking over the 50 EMA. Number four, that it's putting in higher highs. And number five, that it's breaking the whole number at 3,500. If all of those conditions are met, then this looks good for a long idea. So I think staying patient on a name like this for it to break over this level here at 3,500 would pay off, rather than trying to get in and guess, is it going to hold or is it going to fall? All right, somebody said Apple. Apple over 172.5. I don't think I would disagree with you, but Apple's been very tough lately because it's been following the overall market. It's really been following SPY pretty closely. We had that huge run up and then that big sell off, and then that even sold off overnight, right? Remember, SPY had done all of that, sold off overnight, and then into a day of chop. So I think the direction of Apple is probably going to depend on SPY and where the overall market's going to go. It's tough. It's tough to say. Apple, I think I'm going to wait. Me personally, I think I'm going to wait until we get a push back up to 182 area, which I know is a big big difference from where the stock's currently at. You know, you're thinking like, hey, that's 5% right there. Why would you not trade it on the way back up? I just feel personally that Apple on this particular run might be a little overdone because it happened so quick and it just kind of went parabolic without, I don't want to say, I don't know if parabolic's the correct word, but it just kind of went green really on no news. It was just one of those things. It just made a new all-time high, and then all of a sudden, new all-time high, new all-time high, new all-time high. And it happened so quick, right? We were trading it on the way up. But it's just one of those things that I think Apple might need a breather. I'd like to see this, honestly, either pull back or consolidate some first before trying to take a trade on this long to the top side. Unless it does something where we have a huge market reversal and it pushes back up near the all-time highs, then I'll be like, okay, yeah, let's put it on the watch list, right? This is a level of choppiness, though, of consolidation. You know, maybe if you do have market backing, you could say, well, look, this is a level of support at 173, 2 times, and a level of resistance now at 173. So if you have market backing and we are getting that reversal on SPY, then a break of 173 could be tradable on Apple. The issue that I have with that, though, is that you don't know where the resistance is at, right? Is the resistance going to be at 174, or is it going to be at 175? Or maybe it's at 176, right? Or maybe it's up here near one. You know, every single $1 mark is a potential point of resistance on Apple. And that's why I don't like the stock where it's at right now. If you're just joining in, what I'm doing right now is taking charting requests. I've already talked about my top stock picks for tomorrow. This stream is being recorded and will be available for you to watch in its entirety from the beginning as soon as I end. So if you missed the beginning part, you know, don't worry. As soon as I end the stream, you'll be able to restart it from the beginning and pay it and be able to get my notes on what I'm trading tomorrow. All right, somebody mentioned CRM, another gap play there, and another play that's trying to hold up the whole number at 250 as a support. Kind of looks like a bottom bouncer potentially. This one's tough because it's at a level of support that it could bounce at, given that this was a previous level of resistance, but the 200 EMA is just overhead. So your profit margin from where it's currently at up to that 200 EMA is not that great. It's kind of like Apple, right? Where there's so many different levels of resistance overhead that it's almost not worth a trade. So for CRM, what I would do is just wait for a break of maybe 270 or 275 to trade it when it gets up here into that gap area. ADSK. So what'd you say about this one? Big gap overhead to fill. Yeah, I see that actually. So this was the gap that was mentioned. I like to highlight my gaps with a gray shaded box. It just makes it easy to see whenever I click on the chart. One thing about gaps is that once they are once they're filled, that's it. They can only be filled one time. So this price action here, where the stock pushed up and met resistance at $280, this fills that gap up to 280. So then our gap now looks like that. Even though this was the original gap all the way down to 270, $10 of that gap has been filled. We now have resistance placed at 280. So who mentioned this one? Juan with ADSK on the gap fill top side. Yeah, you're absolutely right. A break of 280, I like this trade not only because it's a gap play, but it's also a known level of resistance. We see that right there. So a break of 280 gives you a possible run to the bottom side of that 200 EMA or the 50 EMA. That's going to be your first level of resistance, and all you need is that 2% profit margin. You've got 2.75% there. Definitely possible. I haven't looked at the option chain on ADSK, so I don't know if it offers a good option chain or if it's spready or if it's got low open interest or what. So I would be curious to see what that looks like. But yeah, I do like ADSK as a day trade over 280 if it gets there. If it gets there. We have already talked about Apple, so we're going to go with somebody's asking about Ford here. I did analysis on Ford previously, and that's why, hold on, I'll have to back this up to the weekly. That's why I have all these lines drawn on this chart. Give me 1 second here. Let me kind of clean this up. I've got to back the time frame up to the max available time frame so you can kind of see what we're looking at here. So Ford had resistance right there at around $20, right? And $20 is also a whole number as well. It broke $20 and pushed up, and look at where it met resistance before coming right back down. Right, so if I just take this trend line and moved it up to this resistance point right here, this is what I'm looking at. And it matches up perfectly with this resistance over here. So Ford has been on this massive rip from $8 up to $20 plus most recently, and did put in a pop move up before getting rejected. So it hasn't rejected off this price point once, but twice. It's now just consolidating. It's really, at this point, anybody's guess on where this will go from here. Your support is going to be around $19. Your resistance is going to be around $21. I don't think that there's anything here that's worth a trade until it breaks this range. This is something that's not necessarily a bad thing, because the longer that a stock consolidates for and moves sideways for, the bigger the breakout or breakdown will be, because this is basically a time frame where traders, maybe are buying off the support and selling at the resistance, buying off support, selling at resistance, right? Rinse and repeat, rinse and repeat, rinse and repeat. Every time that this happens, every time that Ford bounces off 19 and rejects at 21, you've got new traders entering positions with stop losses placed above the resistance point. So eventually, when this stock breaks out, or if this stock breaks out over the $21 price point, then we get a massive time where people will close out their positions. If they're short, have to buy back the shares, and that causes the stock price to go higher. So I don't see anything on Ford that's worth a trade until it breaks over the $21 price point. So I would have alerts set there, and maybe even if you're looking to short this as well, have alerts also set at $19. All right, I'm going to end the stream there. Thank you all for your time. Quick review: AMC, Hood, RBLX, CSCO, PTON, and DOCU all making the main chart, or all making the watch list for tomorrow. Some as main charts, some as side charts. It will depend on how some of them open. If I didn't get a chance to review your trades, I apologize. Just go ahead and you can send me a direct message either on Instagram or on Discord, and I'll answer your question about whatever stock it is that you want me to review. All right, again, thank you for your time. Press the like button for me if this video has helped you out, and I will see you all tomorrow. Good luck.